I suspect there'll be another counter bid from Comcast because this is such a key part of what's happening in the media and technology space right now.
So before we talk about the broader narrative of what's happening in the media space, more on this deal specifically. So we just were looking at Sky stock is trading up at 14.80, so clearly trading through that offer price. That implies that the investment community still thinks that Comcast will come in for a counter offer. Is there any level where it just stops making economic sense for the counter offer?
So on one hand, you could argue that we've reached that stage already. So the financing package that Comcast has already put together to make the initial bid is beyond their comfort zone. So they're already in that stage now. For Disney, which remember, Disney is the primary mover behind why 21st Century Fox is making this bid, because 21st Century Fox has already agreed to sell its 39.5% stake in Sky to Disney.
And of course, Disney Fox just got approved.
Absolutely. Disney, this is make or break for Disney. This is why they're throwing everything at it. This is why they're continually increasing. They will go as far as they have to make this happen. So it's already gone beyond the comfort zone of both parties, but the outcome is survival versus uncertainty and probable decline. So that both of them have to go for this.
So let's talk about the loser in this scenario. Whoever doesn't end up winning Sky or outbidding the other person, what happens from there onwards? So does it open up the door to potential takeovers of other media companies, other pay TV networks? And how do you see this playing out?
Comcast will be stronger because we know Comcast has a track record of successful diversification, and they have the revenue streams. So they have recurring revenue streams from their broadcast subscriptions and from their pay TV subscriptions, and they have a diverse media offering for NBC Universal as well. They're also primarily US focused, which is another key distinguisher here. Disney is a global business. Disney is looking to move into a space which it doesn't have many assets in currently. It's looking to become distributor. It's looking to become a full stack media operator to compete with Amazon, to compete with Netflix. So from Comcast's point of view, they can survive this. It's not ideal. It's going to reflect negatively on their ambitions to Wall Street, but they can survive this. For Disney, if they don't make this happen, there will be existential questions asked about where do they go next. And I suspect you're right. I suspect they will leave themselves open to a potential takeover by another another company that's looking to capitalize on this huge disruption at the moment. Because remember, the AT&T Time Warner merger has now been approved. So already there are two big consolidated players in the North American market. Still remains the primary market. The only other market of size that can compete is China, and that's effectively locked down and closed off to outside investment. So these are really the big plays that are going to define the next decade of media distribution and growth.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.